So you see an A plus PO3 setup, but you weren't able to enter at the bottom because you hesitated. Does that mean you're completely out of the play and just have to watch it go without you? Well, not exactly. There's a couple points within a distribution leg where you can actually enter into the trade, and sometimes it gives you a better risk to reward than even the first entry did. In the next minute, I'm going to show you exactly how to catch PO3 continuation trades. So right here we have a textbook for our PO3 play. We have our accumulation right before the 4-hour candle opens. We have our manipulation into a higher time frame order block, putting in the low of the 4-hour. And then we have our entry confirmation, which is an IFEG right here. But your bias was a little shaky, so you didn't want to enter there. And your stop was pretty wide with your targets being right here. The overall risk to reward didn't make sense, and you still wanted more confirmation. This is what you do. You now need to wait for a 1 to 5 minute bullish fair value gap to be created, which we can see we have one right here. You then wait for price to tap into that fair value gap, but you don't set a limit order. As you can see, if you set a limit right when it tapped in, you would have gotten stopped out immediately. Once that fair value gap is retested, you then wait for a change in the state of delivery back to the upside. And this candle gives us that right here. So you enter long there with your stop loss at the low made within that fair value gap. And as you can see, it plays out beautifully, just as the first entry would have, but you actually got a better RR. Now, this is one of the main reasons why stop loss and take profit placement is so crucial, so that you can make sure you are hitting bigger winners than your losers. And it is very situational.